Most investors panic during corrections. Raoul Pal starts talking about bananas, and somehow millions of crypto investors know exactly what he means. If you've spent any time in the crypto world over the past couple of years, you've probably heard the phrase banana zone. It's one of the most recognizable ideas associated with macro investor Raoul Pal, the founder of Real Vision. According to Pal, the banana zone is the stage of a crypto bull market where prices stop moving gradually and begin accelerating almost vertically. It's the period where fear turns into excitement, excitement turns into euphoria, and markets seem to go up every single day. But recently, Pal hasn't just talked about the banana zone. He's repeatedly mentioned something even more specific: Banana Zone Phase 2. Each time he made that call, the crypto community exploded with optimism. Some believed Bitcoin and other digital assets were about to experience another historic rally. Others argued he was simply repeating the same prediction over and over again. So what actually happened after each of those calls? Was Raoul Pal right? Or was Phase 2 more complicated than many people expected? Let's look at the timeline. First, what is the banana zone? Before examining the timeline, it's important to understand the idea itself. Raoul Pal believes crypto markets generally follow liquidity. When central banks loosen financial conditions, borrowing becomes easier, liquidity increases, and investors become more willing to buy riskier assets. Bitcoin has historically benefited from those periods. Pal argues that crypto bull markets usually unfold in stages. The early stage attracts experienced investors. The middle stage brings institutional participation. Then comes what he calls the banana zone. This is when prices accelerate rapidly because new investors begin rushing into the market. Media coverage intensifies and fear of missing out spreads everywhere. Instead of steady gains, markets begin moving much faster. According to Pal, this final acceleration often surprises even experienced investors. The first Phase 2 call as crypto recovered from earlier corrections. Pal began suggesting that the market wasn't finished. Many investors believed the rally had already reached its peak. Others worried that tightening monetary policy would eventually end the bull market. Pal disagreed. He argued that previous crypto cycles often experienced significant pullbacks before entering their strongest advances. Rather than viewing the correction as the end of the cycle, he described it as preparation for another leg higher. This became one of his earliest public references to what he called Banana Zone Phase 2. The reaction was immediate. Social media is filled with charts comparing previous Bitcoin cycles. Supporters argued that history was repeating itself. Critics claimed the comparison ignored changing market conditions. What happened next? Bitcoin stabilized after the correction. Investor confidence gradually improved. Several major cryptocurrencies also recovered alongside improving market sentiment. While prices didn't immediately explode upward, the market avoided the collapse many bears had expected. For supporters, this strengthened confidence in Pal's framework. The market changes again. Financial markets rarely move in straight lines. Even during bull markets, corrections are normal. Profit-taking increases. Economic headlines create uncertainty. Unexpected geopolitical events shake investor confidence. Crypto is especially vulnerable to these swings. Following another period of market weakness, many traders once again questioned whether the bull market had ended. Once again, Pal remained optimistic. Rather than abandoning his original thesis, he argued that the broader cycle remained intact. Liquidity, he believed, still supported digital assets over the long term. This led him to repeat the phrase, Banana Zone Phase 2. Some observers criticized him for repeating the same prediction. Others argued he wasn't changing his view because the underlying macro conditions hadn't fundamentally changed. This distinction is important. Pal wasn't claiming every short-term bounce would become explosive. He was saying the overall cycle still pointed toward another major expansion. What happened after that call? Markets once again recovered from their correction. Bitcoin regained momentum. Several large-cap cryptocurrencies also strengthened. Investor sentiment improved considerably. Exchange-traded fund inflows remained supportive. Institutional participation continued expanding. Although volatility remained high, the broader trend stayed positive. Supporters viewed this as another successful application of the banana zone framework. Critics argued that prices had risen less dramatically than many social media posts suggested. In reality, both sides had a point. Markets did recover, but they also experienced far more volatility than simplistic, straight-to-the-moon narratives implied. Why does he keep repeating it? This is perhaps the biggest misunderstanding. Many people assume every time Pal says Phase 2, he's making an entirely new prediction. That's not really what's happening. Instead, he's repeatedly reaffirming the same broader market thesis after corrections. Think of climbing a mountain. You don't restart the journey every time you stop to catch your breath. You continue climbing. Pal believes crypto bull markets behave similarly. Large corrections interrupt the advance. They don't necessarily end it. So when markets pull back and then stabilize, he often argues that the next stage of acceleration remains ahead. That's why the phrase appears multiple times. It's less about changing forecasts and more about maintaining confidence in an existing framework. Why investors love the banana zone? The concept resonates because it matches previous crypto history remarkably well. Bitcoin has repeatedly experienced periods where prices remained relatively calm before suddenly accelerating over a matter of weeks or months. Ethereum has shown similar behavior. So many alternative cryptocurrencies. These explosive periods create enormous wealth. They also attract millions of new investors. The banana zone gives people a simple way to describe that psychological shift from skepticism to widespread optimism. It's memorable, it's visual, and it's easy to understand. That's one reason the phrase spread so quickly across crypto communities. But there are risks while the banana zone is an interesting framework. If you enjoyed this breakdown, like the video, subscribe to the channel, and drop a comment below letting us know whose market predictions we should analyze next. Thanks for watching, and we'll see you in the next one.